Hey guys, Mike here. So, been a few days. Unfortunately, when you film in a sunroom in Florida, it rains a lot. As you may be able to hear it right now, and I'll try to filter out what I can of the noise. But I figured, it's been a couple days. Let me go ahead and put some stuff out because quite a few things have happened in the market, and obviously had a nice little comeback day today after things were red, which is interesting. I'm going to show you exactly why that happened and a bunch of things we need to be looking out for. But obviously, I think the big news that came out, and if you're an NVIDIA holder, you're probably not very happy. Some kind of filing here in NVIDIA said the U.S. told the company on August 26th about a new license requirement for future exports to China, including Hong Kong, to reduce the risk that the products may be used by the Chinese military. And you can see right here with the breakdown of revenue, you can see not a whole lot comes from the United States. When you look at that right there, I mean, most of their revenue is foreign revenue, of course. And I've read multiple things where it's, maybe it's affecting by 400 million, but obviously they've already downgraded their guidance to begin with. And it looks like they're probably going to have to do that again because this is going to hit them if this all stays true. And the big real risk of this, I think what people are holding their breath for, is that if the U.S. obviously goes through this, that the Chinese will not, respond in some way, shape, or form, which I can't imagine them not doing that. We'll have to see. But this whole thing really just comes down to China and Taiwan, right? Will China invade Taiwan? If that happens, that will be disastrous because Taiwan makes so much of the chips that are, around the world. And so that would be a huge problem. And then how would we respond in the U.S., our government, that is? And so it would just be a hot mess. So you better hope that don't happen because it'll make Russia and Ukraine look like nothing. Okay, this would be way more disastrous as far as supply chains, economics, you name it. And so, that will be not good. So we're going to cross our fingers that does not happen. And, if you just look at the chart here, I'm going to show you exactly why the market basically did a bounce as it was going red and then turned around. And I will admit, like I told the members, it's been a few days, we lost the technicals on the charts way faster than I thought we would. I thought the bulls would put up more of a fight. I didn't think we'd go through the moving averages that fast, but we went through them like a hot knife through butter, filled that gap below right there. But what happened was, almost to the penny today, as we were selling down, we hit the 618 Fibonacci retracement level, which is a big level, and we bounced. Okay, so we filled the gap and we bounced off that right there. You can see right below there's a trend line I've drawn for you. That is the June lows. We bounced off it one time before, and now we are approaching it again. So right, in that level right there, you see you got the trend line, you got the Fibonacci retracement level, and what's right below it. And this is where the danger lies, is if we break through that Fibonacci retracement level, through that trend line, you got those two gaps right down below it right there as well. But you could see a full reversal if that's the case. And, if you just look to me, like the area that everybody's kind of seeing to be drawn out here, where they think we'll see like a bottom in the S&P for now is like somewhere between 3,800, 3,900. Obviously, I think we broke 3,900 today before we bounced, if I'm not mistaken. And so that really is the level where a lot of people are looking to say, that's what they think the S&P is going to bottom for now. Don't know if that actually is the bottom, so we'll have to see on that one right there because oil obviously continues to roll over. But I think the one stock everybody's watching, and I think I agree with them when I hear people say the S&P will not actually see the bottom until Apple actually rolls over. And I mean really rolls over and starts selling at a discount. Like I think that's because, remember, it makes up, I think now like 7.4% of just the S&P by itself, which is just insane when you think about that. But yes, that's where it's at. And until that happens, I don't think you're going to see, the bottom, so to speak. But, again, we'll have to see. And so, but like I always say again, though, because we'll be in a bear market. Again, we'll be below 20% on the S&P, which we haven't quite reached again yet. And, but we'll get there. And the other thing that I'm going to be watching, and everybody will be watching, is the breadth of the move, right? It was huge, right? How many stocks are above their 50-day, their 150, and then their 200 moving averages. And you see it was a huge move up, especially on the 50 down there. And it's rare if you draw these lines across that we actually hit that basically alert or indicator, whatever you want to call it, and end up actually retracing back down to where we came from. And it's rare. It happened once. It was in 2011, I believe, when I look at this. And so that's why everybody's like, well, it rarely happens. You can see it didn't happen there, didn't happen there, didn't happen there. And then you go to 2011, and that's really about the only place you ever see right there. It didn't go all the way back down, but, you get a big retracement Everywhere else, though, is pretty much that what they call a V-shaped recovery when you see this. And so, again, though, this is the year of first. So, it wouldn't surprise us if we did retrace back down. Who knows what's going to happen on that? But I think a lot of people, what they're betting on is the CPI data is going to come out cool. I believe it was South Korea CPI data came out like a 5.7. They expected 6.1. I think people are expecting that to happen. And then they're already trying to price in a 75 basis point hike from the Fed in September. And they're pretty much laying the groundwork for 50 anyway. They've already told you they've done, 92 rate hikes, and like 76 of them have been below 50 basis points. So they're kind of setting that up. The one's totally off the table. So you can imagine if you get a low CPI print and only a 50 basis point hike, or maybe even a 75, since that's what the market's kind of pricing anyway, that, the market moves up. Because remember, 56 to 58% of the time the market moves up anyway. And so I think that's what people are kind of looking at. And, the bigger question really is for me, and I think a lot of people is, when you talk about energy, as it's been rolling over and stuff, the question is if energy, which a lot of people are thinking in the winter, is going to go back up because in October, America will stop using their reserves to put on the market. And so, it depends on what the Saudis are going to do and stuff like that. But if oil starts to go back up, can tech go back up with it? Do they go up simultaneously? You can see in this chart, on the little moves, yes. On the big moves, no. When oil makes big moves up, tech sells off. And you can see it multiple times throughout this chart right here. And so that's what we really got to know when winter comes. What is tech going to do and what is oil going to do? Is it going to go back up or not as soon as the end of October hits? And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And of course, the other things that we're going to be watching out for to trying to tell us what the Fed's going to be doing is what's going on with the labor market. This labor market still comes out, and, we're still in a hot market. I mean, you can see right here, this is U.S. job openings and labor turnover opening layoffs. And you can see there's just not a big move up right now. You're hearing about certain layoffs from like Snap and these other companies. But, can this turn quickly? Absolutely can turn quickly. You see, that's a fast move up. I mean, it can turn fast, no doubt about that. We've seen it multiple times. And tomorrow, don't forget, we have to look out for the jobs report. We're going to know what the unemployment rate is and all that good stuff. So that's going to be big before, I believe that comes out before market open. So, that right there will mostly move markets as well. We'll have to see. Obviously, you have expiration, options expired on Friday and things like that too. And the other one, which I just read today, I think the 30-year mortgage is like, 6.8% or something like that. And, these are real house prices dropping off a cliff right now, as you can see. So, the market's doing the work for the Fed when it comes to the housing market, for sure. I mean, prices in certain areas have dropped off a cliff. Some are cooling off. I know in my area, they were on fire. And now I'm starting to see people and they're dropping their asking price down. And so we expected that to happen. The big problem isn't so much housing prices, it's rents, right? When will rents finally start to either, level out and stop going up or even start to drop? And so that's a whole another thing we're looking at. But really, it's just the employment market. I mean, it's still hot. People are still able to negotiate the wages and get higher wages. And so you're not going to have price stability till you get that. And demand is still up there. I got to ask a question for those who are still with me here. I know somebody asked me, they said they went to buy a new car because they need a new car. And they say, well, here's MSRP or whatever, the sticker price, right? Which used to, you were a sucker if you pay sticker price. Now they have sticker price plus what he told me they call a $10,000 market, what was it called? A market adjustment fee. That's what it's called. $10,000 on top of the sticker price. And I'm like, that's got to be a joke. So I looked it up and I'm like, he's right. That's a new thing. I've never heard that before. I mean, I've never, ever come close to sticker price on a car. And now you're paying the sticker price. They want that and $10,000. So I got to ask if you're in the business or maybe you know something about the auto industry. Are things, is demand just that high for these cars? I know supply is low. But is demand actually just that high that they can actually do that? Because to me, it's highway robbery. I was like, there's no way I would do that. And so, I read certain things for him and tried to tell him, you have to call the manufacturer directly, because I know Ford CEO told their dealership, the dealerships out there selling their cars, quit that, stop it, stop trying to mark stuff up like that. But I guess, times must be good or something. If you're willing to put a $10,000 market adjustment fee on top of the sticker price. And so I just want to know, you guys, have y'all heard anything like that? Have you seen it? Do you know a way around it? Or is that just some gimmick, some kind of fraud or something going on there? But He showed me the picture. He said, here it is. You can see it. And I was like, wow. He test drove 2 different cars. And I was like, that is crazy. I've never heard of that before. But again, is demand just still that high? And I'll tell you right now, I know for like luxury vehicles, I told you guys at certain income levels and above, they don't feel inflation. You look at luxury vehicles, they're still going strong, right? Still going strong. And so, and again, that's like a friend of mine who works over for the rich when it comes to real estate. They're still buying houses. They got to put that money somewhere. More money than they know what to do with it, right? So, yeah, I was just curious if you guys heard anything about that. Let me know down in the comments, and I'll relay to him or something. If you happen to be in the business, it's even better. But I just thought it was weird that repos are going through the roof supposedly, and now all of a sudden you got, I guess, demand's just that strong at these dealerships. I don't know. So that was interesting. But anyway, I just want to catch you guys up today. I'll come out with another one tomorrow. Hopefully we get better weather than this, because it's been like this for 3 days now. So hope you guys have a good one, and I'll see you later.